What's up, everyone? My name is Ryan Kramer. I'm with Ping Pong Payments. I'm the affiliate marketing manager for here. Welcome to another episode of Crossover Commerce. I have a very special guest with me today, Don Henig of AccrueMe. Don, welcome.
Hey, thanks, Ryan. It's exciting.
Yeah, exactly. Thanks for waking up early with me. I know you're there in New York, so finally somebody in my own time zone I can speak to instead of around the world, which is not a bad thing. But everyone
Yeah,
out there, thanks for joining us early in the morning. If you're on the West Coast or around the world, welcome. So, Don, I know we've touched base before, and we kind of go over your background, who you are, what you do as a company. Why don't you kind of like kick us off? Because I know there's tons of people excited about AccrueMe, hearing lots of buzz about you as a company and you as a co-founder. Why don't you kind of kick us off and just kind of give your maybe personal background, your
sure.
professional background, and we can go from there.
You got it. I'll tell you, I've done a bunch of podcasts and webinars. Nobody's asked me my personal background. They've asked
Hey,
professional.
we're here to go. We're here to go in it all, man. Because I think that, and like for people who don't know, like kind of or have heard our my story. I have such a unique background as well. Like I won't get into the details with that, but I think kind of the personal shows the insight and the kind of the perspective, which is huge from what our show is about, is perspective and how that drives people's business moving forward. So I obviously want to hear your perspective on what kind of led you to where you are today.
Sure. It's interesting. I grew up in Brooklyn, New York, and moved to Long Island. And when we moved to Long Island as a kid, all I told my friends in Brooklyn was we were moving to the country. And now, Long Island's got, I don't know, 6 million people. So it's not necessarily the country. Although I live on a beautiful lake that flows down into the ocean. We're an hour outside of Manhattan. It's just great, man. We love it. We're surrounded by water on Long Island, so we boat, my wife and I, my kids. Our dog is always on the boat, and we have a ball. Life is great. But getting back to the business side, I my parents both were civil servants, and always wanted me to be a civil servant as well. And naturally, I always wanted to open my own business. I wanted to make $1 million. That was the thing, and I wanted to do it before I was 30. So I did do that, which was great. But I didn't stop there. So my first business was a financial planning business. Built that, and then as a financial planner, other financial planners started asking me about mortgages. I knew nothing about mortgages. I knew commercial lending, but not residential. So I started a mortgage company and built it to one of the largest in New York State, and sold that in 10 years, which was fantastic. It took some time, built a mortgage broker franchise, built that to 760 companies nationwide, and sold that in a couple of years. I love being on the fields with the kids. So I started a soccer newspaper. Never did anything in publishing in my life. And I started something brand new, never knew nothing about it, and built it to 176,000 copies, 32 full pages, newspapers. It was not digital at the time. And, I handled everything. I was the only employee. Ryan, I'm not hearing you.
Sorry, still I have myself on mute. I do this all the time, Don. Don't worry. The more you talk to me, like I put myself on mute a lot.
You scared
Back
me,
in
man.
yeah. Oh no, you're good. Typical host trying to produce and host at the same time. But newspaper industry back when you still got your ink on the hands. I worked in the industry, my first job actually. So
Oh,
uh,
really?
yeah,
Oh, yeah.
I my first job out of college. For those of you who don't know, and maybe you don't know yourself as well. I was a new business account executive for a local regional newspaper in southern Indiana, Kentucky, and Illinois. So I had to go literally door to door, collect business cards for people, for businesses, and I was selling solutions like print ads, inserts. I was doing magazine advertisements, and then we're doing display ads on our website, as well as like monster.com listings and SEO solutions, SEM solutions. Back in 2012, when obviously there wasn't this boom in
Yeah.
technology, but yeah, unfortunately after 2 years, I was let go, so I was 0 for 1 after my first job in out of college. So, but yeah, I can sympathize. Obviously, newspaper industry back when it was still print.
It was great, man. We built it
I
to
know.
176,000 copies a month. We were the official New York State soccer newspaper, and sold that. So it was great. It was a lot of fun. But going door to door, I sold Funkin' Wagnall encyclopedias door to door. It was brutal. I would get up in the middle of the night, not get up, but after going out with my friends, and I got extra jobs cleaning bathrooms and washing floors at restaurants, and just did that to make extra money. I did tons of different things. It was nothing that I wouldn't do, and it was nothing that I didn't want to learn. So I always was learning. But finance was always where I fell back. And I'll just give you one little story, and that leads right into AccrueMe. Is back in the late '90s, after I sold the publication, I thought of, what do you want to do next? And I said, we're in the .com boom. Everybody's in the .com. Everybody's in technology. So I got into technology because I said to myself, when my when my grandkids ask me one day, what did you do during the .com boom? I want to say I was involved.
Exactly.
Same with today. What are they going to say when your grandkids ask you, what did you do when Amazon was taking over the world? Oh, I just sat on the sideline and watched? No, I want to get in and see what's needed and where's there a fit. I'm not an e-commerce expert. I'm not that guy. I know finance. So in looking at this with my partner, Eric, we looked at, lending options. We didn't like anything. Every lending option I saw out there, and I did a lot of the research myself, they were great for the lenders, but they were lousy for the sellers. They have great marketing, but it scared me. And so I didn't want to participate in any of that. If I can't win when you win at the same time, it doesn't pay for me. I don't want to be a part of that. So my partner Eric came up with this brilliant idea. He said, "So Don, why don't we partner with the sellers?" So what do you mean? Because we knew they all needed cash. We knew that they all wanted to grow. They knew I talked to a bunch of sellers, and they all used the $1 million number on me. That they wanted to make $1 million, they wanted to sell $1 million, and a lot of them had almost no money. So we knew they needed money. And Eric said, let's partner with them. So we came up with this idea that's different from any lending option that's out there. That's
Right.
really truly growth capital to allow the sellers not just to survive, not just to pay their bills next week, not just to get, an advance on the money that's already owed them, but to really grow, to take their business and double their business in 6 months, or double it and then double it again in another year, and then triple it and quadruple it and so forth. And how do you do that? Well, we came up with this concept of doubling the seller's capital, matching whatever they have in the business. We'll give them the same amount. Then not making any payments, no interest rate, and no loss of ownership. So we don't take any ownership of the company, but we become a partner of theirs for a short period of time, for however long they want to use our money. And we just share in the profits. So they really can't lose. There is one way a seller can lose with us. Only one way that I can figure out is if they take our money and they just leave it in the bank. Then they didn't get any benefit out of it, and they're paying us a percentage of profits. Not helpful to anybody.
Right. So I guess like how, so that there's just so much to unpack there, Don. I think like a lot of people are super. No. That's good. That's why we're here, to kind of.
I get excited, Ryan. I get excited.
That's great. I love kind of diving into that. So your partner kind of saw a niche. You wanted to be a part of this. That's fantastic. There's so many options out there. A lot of people are like, how do I want to sell on Amazon first and foremost, but they're doing well. They're kind of like muddling. I say muddling. They're kind of treading water. They're they're not growing at all. Is that the instance that you guys said that this is our opportunity to help these people grow? Like, it sounds like your company's AccrueMe is here for. There's opportunity to be had. They just need a little push, or like a little bit of a lift, if you will. Is that kind of the philosophy for you guys?
Yeah, absolutely. So you're absolutely right. So many sellers that we talk to, and we see their numbers, and we see that they're doing well. They're doing okay. It's really good. They're doing well on a month-to-month basis. But from day one, we came up with this little comment called the Amazon FBA dilemma. And this is before we knew much, but just from talking to sellers, we realized that just like any other business, if you earn X amount of dollars, let's say you earned, I'm just going to use a small number. You earn $2,000 and you have to pay rent and you have to eat and you have a car lease and, you got to go out to the movies or dinner once in a while. You have to go out on a date. That $2,000 is gone very, very, very quickly. And if you live in New York, that $2,000 is gone in like the first 3 days. Seriously, it doesn't last long, man. It doesn't last long.
Curse you, New York, and your expensive ways to entertain people.
It's crazy. It's crazy, really. But seriously, that's the dilemma. So I'm earning $2,000. Let's just say I have $1,500 of expenses before I do anything with entertainment. What do I do? How am I going to grow this business if I'm spending $1,500 a month and I only made $2,000? Okay, I can leave $500 in my business. I'm not going to grow very fast. It's just reality. You're going to tread water, as you said. So what we did was we looked at them and said, all right, well, what if we could take that seller and have them earn not $2,000, but $4,000, and then eliminate the payment so that all that money can go back into the business. So the next month, they don't have $4,000 of profit. They have whatever the number might be, $6,000 of profit. And all that money goes back in. And the next month they have, $9,000 or $10,000 of profit. Now that seller can see, a real change in their business. And
it's a game changer.
It's a game changer for their life, but it's not for everybody. It's for, you have to work harder. Think about it. If you're a seller, and not for anything, any business owner, you're going to have to put your head down. If you're in the wholesale side, you're going to have to go out and find more suppliers. If you've got products, you've got to start doing research in the private label world and find another niche to go after. You're going to have to build and build and build. So what we require is, for you to work. And so it's a perfect marriage. These sellers know Amazon. We're not the expert. We're the experts in finance. They know Amazon. So it's a perfect marriage. We'll give them the money to grow their business like they could never do on their own. And they really can't do it with any other source. If you're making payments, monthly payments, think about it. If you got $10,000 and you're going to make 20%, all right? So that sounds great. You're going to make $2,000. But if your monthly payment is $1,850, you're keeping $150 to grow. You're not overcoming that FBA dilemma, that Amazon dilemma, that small business dilemma. If you could take that $2,000 of profit and put it all back in with another $2,000 of profit, holy cow, you can really, really, really change your business and quickly.
Absolutely. And for those and everyone who's just joining, I'll kind of reintroduce us, Don, if you don't mind.
Sure.
My name is Ryan Kramer. I'm with Ping Pong Payments. I'm the affiliate marketing manager here and host of our show, what I have deemed as crossover commerce, and that yields from multiple ways of building your e-commerce entity, whether it's Amazon, on e-commerce, however you guys are selling, if you're even thinking about selling. We're here to give you a different perspective on different facilities of Amazon and growing your business. Don Henig, co-founder of AccrueMe, has been lovely enough to join me today, and he has a super unique background in terms of finance, and I think a lot of people just don't understand. You hear about like taking outside investments, right? And they think almost like a board of trustees is coming in and they're going to start doing things their way, almost like a typical business setting, right? And I think that's what's scary to a lot of either businesses or individuals of, hey, I'm not going to be able to still do my thing. I can't market. I can't do any of this kind of stuff. What's kind of like, not catch, but like what's kind of like, how do you guys sell AccrueMe? I mean, I guess what is the catch? Like where does kind of AccrueMe make their stake, if you will?
Yeah, sure. Absolutely. It's funny. The question I get asked most often is that it sounds too good to be true. We're going to double your capital. We're not going to take any payments. There's no interest rate. We're not going to own any part of your business. how is that possible? You're going to let us grow and keep all of the money in the business for 2 years, let's say, and sell our business, and AccrueMe is not going to get any of the upside? That's right. We don't get any of the upside. So what's the catch? There really isn't a catch. The catch is that we will do better as well if you're growing and growing and growing, because we earn a percentage of profits. The only way we win is when you win. You talk about win-wins. It's true. If let's say you lost money right now, we don't get anything. You don't owe us anything. We didn't earn anything. If you make the same amount of money, that's not good for anybody. But if we could double your capital and you could grow your business by double, holy cow, you can't lose. If you could grow it at all in any way, if you can grow your business at all, you're just paying us a percentage of the profits. You can't lose. So the catch is that we get a percentage of the profits. That's it.
It sounds pretty straightforward, right?
Straightforward. But let me give you the numbers. So this way you have that. Whatever our investment is, all right? So we represent 50% of the business. So let's use the $10,000 example again. You have $10,000 of capital, which means inventory at cost, the money that's due you from Amazon, money in the bank. Let's just call that a total of $10,000. And now we give you $10,000. So now there's $20,000 in the business. Clearly, you could do better with $20,000 than you could have with 10.
Absolutely.
If you can't,
there's a lot more possibilities. Exactly.
Yeah, don't take the money if you can't do that. But it does mean that you're going to have to work harder. You're going to have to make it happen. So we give you $10,000. You have $20,000 now. We both represent 50% of the business, right? We both represent 50% of the capital. So if we represent 50% of the capital, cut our percentage in half. So we get 25% of the profits for that month. You get 75%. Again, we set it up in your favor. If we represent 30%, let's say we put in, keep the $10,000 number. You have 7,000 and we put up 3,000. So the total is 10,000. We represent 30% of the capital. What percentage do we get? 15%. So half of whatever our capital percentage is. And we did that on purpose. So this way, you're going to make out, I don't want to say like a bandit, but you're going to make out pretty well every step of the way. And we do very well. So the catch really is that we're going to do better than actually a bank would do, but we're helping you double your business. A bank is going to, or any loan is really going to help you limp along and grow slowly, possibly. And what we're all about is that slingshot. We're like, pouring gas on the fire. If you really want to take your business to a new level, there's nothing like this. There's nothing like this has ever been done before, which is great.
Yeah. And I think that's what a lot of people are just like kind of opening their eyes when they hear this. And this is something that Dwayne Montgomery just mentioned on YouTube. Again, for everyone who does have a question, submit it in the comments below. We see everything. So just like Amazon, just like your phones or Alexa or Google, everyone sees and hears everything. We're not that scary. This is an interactive show. We're not here to present anything. We're just here to bring facts and give you guys perspective on cool topics like this and investments. So like Dwayne just asked, percentage of profit structure, like it seems pretty straightforward. Everyone's a win-win situation. So why do you think, like, I guess, Don, what?
I got to say, first off, I think I'm reading Dwayne's mind.
I was going to say, yeah, I mean, we're kind of like, everyone's like, all right, how's the story going to progress? And we're just like, you stay tuned. But I think like it makes sense, right? Because it almost like, because it does seem somewhat too good to be true, almost like, why hasn't another company done this before?
It's a great question. And we actually asked that question internally. And it's like, I'm just going to give you an analogy is all I can think of is, how if you're driving on a highway now, right? Anywhere in the country, if you're driving on a highway, they have all these ridges on the side of the road. So if you doze off or if you're doing something you shouldn't be doing, like texting or changing the radio or whatever, or yelling at the kids, you veer off the road a little bit and the car goes boop, 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 and it wakes you up and it pulls you right back, right? Well, that cost nothing. That cost nothing. It didn't they didn't do anything special. They just put ridges in the road. They probably saved thousands and thousands and thousands of lives as a result of that. Why the hell didn't somebody think of that before?
Exactly.
I mean, in New York, it's only been around for maybe 3 or 4 years, 5 years. Around the country, anywhere I've been, I've seen it for maybe at least 10 years. But why didn't they figure that one out before? It's a simple one. But I literally have a list of 100 of those that are just, why wasn't that ever done before? Same thing here. When we first started this and we started talking to people, people started coming back to us saying, and these are finance people saying, holy cow, in a short period of time, all lending is going to be the AccrueMe way because it just makes sense. Everybody wins. So I think that's what we're going to find. I think we're going to find that, 2 years from now, it won't be just us doing this. It'll be Goldman Sachs that'll be coming in. It'll
Sure.
be others, that, and trust me, Goldman Sachs has already been checking us out and looking at what we do because it's, we got up to literally the highest level at Goldman Sachs and the highest level at Amazon on our, website and on my LinkedIn, checking out what we're doing because it's interesting and it's innovative. And there's not much innovative in the lending world and the banking world. We're pretty innovative.
You and I just talked about that. Like our industry, for those of you who don't know what ping pong is, we're a cross-border payments and, money saving option for those selling internationally. And that's my plug for the company right now. But our industry is just almost too good. It's so straightforward, but then, it's so like people don't, it's not sexy. I always tell people it's not a sexy industry to be in, but it's super important because that's why people get in this industry. They do it to make money, to change lives, whether it's their own families, their kids, their business, to stay alive during a pandemic. There's so many different opportunities for people to just grow, and they just aren't educated in that capacity of, what's out there. Like, how can I make it, essentially? So almost like the American dream, if you will, but like, assisting them along the way. How is AccrueMe, how are they able to do this? Like, to do what you guys do on a scale that you need to do it to make your business profitable. How are you guys able to achieve such a feat?
I'm going to come back to that in 1 second.
Sure.
But you brought up the pandemic, and
Yeah.
you reminded me of something that, last, February, March, April, when, Amazon shut down shipments of anything that was non-essential. We had clients that were dying. They literally went from making, great profit to making no profit, and in some cases losing money. And what did we earn? We earned zero. What were the payments that they had to make? Zero. And literally, I only spoke to 2 of them, but personally, but in 2 cases that I can speak of personally, they said to me, if I had to make payments, I'd be out of business because, it would kill their business. So we're not just, in my mind, better than a loan because we can help you grow, but we're safer as well. Plus, we don't have personal guarantees. This is completely a business transaction. We're not looking at credit reports and financial statements. We look at your inventory and we analyze your inventory to see how you're going to do. And that's it. And you only pay for as long as you use our money. It's completely temporary. So how do we do this? Interesting. My partner, Eric, and I pick my partners pretty well. He's a Wharton grad.
Eric, if you're watching, this is him saying, thanks, Eric, for bringing me along.
Exactly. Wharton grad, lawyer, smart son of a bitch, which is great. And, just really terrific. He's the one, again, that said, why don't we partner with them? And, it caused us to brainstorm this entire idea. So he and I are walking in Manhattan one day, about a year ago, a little over a year ago, and we going into the first hedge fund that we were going into to see if we could raise money with this. What does Wall Street think about what we're doing? Are they going to be afraid of it? Are they going to love it? Anyway, long story short, I said to him, do you know what 242 is? And we're standing on Broadway outside the firm. We're ready to go in. He said, no. I said, 242 is the amount of pitches that Howard Schultz from Starbucks made before anybody put money into Starbucks. So I said, we're not going in here to get money. We're going in to show them the plan, go over numbers, answer their questions. They're going to ask us questions we never even imagined. These are the smartest people in the world. They're going to run numbers better than we could ever possibly run numbers on our own business. And so it's been, that's what we were expecting. And we went in and it was true. We took a half-hour meeting and it lasted 2.5 hours. We came back a couple weeks later and came back a couple weeks later. Altogether, 6 weeks later, they gave us a commitment for $100 million to invest in Amazon sellers. So wow. Literally, Ryan, I have $100 million burning a hole in my pocket. I got to give it out to sellers.
Don't do it. Is that what's behind the door behind you, Don? Is that what's in your house? You're just sitting on a stack of $1,000 bills or whatever, something ridiculous.
That's my dog trying to get in and see what's going on.
No, I'm just kidding. Yeah. Well, so you guys raised $100 million. That's mind blowing. I mean, you guys. I mean, you had to show them figures. You had to show them all the fun stuff. So, like, what's that process like? Is it nerve wracking? Is it like you come in with a number in mind and they're like, do you slide it across the table and you're like, this is what we're asking, and they send it back to you? Like, what's that process? Like me, myself, I've never sold on Amazon. I don't own a business. I work for businesses and companies that do these kinds of like negotiations. What's that like walking into Goldman Sachs or what was the name of the bank again? I missed that part.
We don't disclose it. It's a hedge fund.
Okay, a hedge fund. So you walk into a hedge fund, you have to pitch numbers frontwards, sideways. They have to look under every nook and cranny to make sure their job is to make sure they're not going to blow all this money. What's that process like for you? Like personally, business like? People are relying on you guys to, come up with this number.
Truthfully, I looked at it as being exciting. It's going to be fun. And, you never like to be asked a question that you can't answer, but I was expecting that. There's got to be things that we say, oh, shit, I never thought of that, and it's always going to be that. So, we had some of those without question. And they had some great points and some, one person is in favor and one person is not in favor. And one person says, the guy who's not in favor, you're wrong, look at this. And they're arguing a little bit among themselves. And it's just wonderful to be in the conversation and then to get called back for another conversation. And, they did their research from, the first one to the second. So the questions are going to be even more pointed. And they were, but they were good. And, I think we look at them as being a partner and, helping us. And I think they look at us as being a partner as well and being completely straightforward and honest with them. And that's what everybody looks for. So long story short, they asked us what we wanted. We told them what we wanted and what the offer was, what we thought was fair. And we didn't put in a low ball offer and try to negotiate and everything. We went in with what we felt was fair. And they didn't negotiate with us. They said, yeah, we agree. We think that's fair. And
sounds good.
And that's the way it's supposed to be. That's the way it should be.
Right.
Some people are the negotiator type that if you come in with a fair offer, they're going to try to kill you. And if that was the case, we would have walked out, and learned our lesson. But in this case, they were straightforward, honest, good people, just as we were, and worked out pretty quickly.
Right. So what is that roadmap that you told for those? We have a couple of questions I know that I've rolled in. So like, what's that roadmap look like? I know we have another question from Dwayne. I think what qualifies my business to work with you? What's that roadmap for someone like AccrueMe to? Are you guys reaching out to people? Are people reaching out to you? What's that like marketing strategy? What's that kind of business strategy for you as a company to get in front of these people? Because I mean, if you guys are, how old's AccrueMe officially? Is it?
What we did, we're about 18 months, but for the first year, all we did, we had no underwriting criteria. We had no system. We literally gave about a dozen companies money. We had no idea how they were going to do. We couldn't analyze anything. And we worked with them and we learned a lot, and that's what we were expecting. And we didn't lose any money, and every one of them loved what we did. So it's been, and they're still with us. So almost all of them are still with us. The ones that are not with us are still friends. If I call them right now and needed help, they would do it in a second, just as I would for them.
Awesome.
Yeah, it's been great. So, it's just been a solid experience so far. But from a marketing standpoint, COVID kind of hurt us. Not kind of, COVID did hurt us because
it stopped your momentum.
Yeah.
I would say. I think for a lot of people, it did that.
Yeah, coming out of the box, being brand new to the industry, we were really counting on all of these conferences in Vegas in March, and they didn't happen. And the online ones, some are good, I'm sure, and some didn't work out so well. So we didn't get the word out the way that we want. So we're doing podcasts and webinars and some press releases, and we're bringing on a CMO, a chief marketing officer from the industry shortly, who we're very, very excited about. Can't say the name just yet, but
it's a secret. Yeah,
it's a secret for a few more days.
Stay tuned, everyone. Give it a couple of days, and
exactly,
you'll know.
Exactly, and everybody will know him. And just a great guy with a lot of knowledge and a lot of, oh my God, zest. The guy that is just ready to go and is going to work as hard as could be to make things happen. And this is exactly the kind of person that is part of our team. So we're excited about that. That's a game changer for us. Yeah. But what was Dwayne's question? Oh, how do
Dwayne? What qualifies me to work with you? Yeah. Sorry, Dwayne. We'll get to you. Yeah. If you have questions, everyone who just joining, again, this is Crossover Commerce. I'm Ryan Kramer with Ping Pong Payments. I'm with Don Henig of AccrueMe. We're talking investments, everything and anything investments, from AccrueMe to if you have a question about, where do I start? I had this, I got burned in the past. I have a negative, taste in my mouth, or you hear stories. Let's get those out of the way. Let's talk about, your fears as a seller, as an e-commerce person. But we're here to have an interactive conversation. We're not here for presentations or anything like that, everyone. You're listening on LinkedIn, you're listening on YouTube, Facebook. This is the place I want you to come to get your information, to get a different perspective, because I think me as a person on the outside haven't gone through this process. You as a seller need to know if this is how you're going to elevate your business to the next level. And Don's even, go back and rewatch this, because in the beginning he's talking about how you can elevate that business moving forward. And of course, individual questions, you can reach out to Don and his team, and we'll kind of go through that at the end. But Dwayne's question, what qualifies my business to work with you? Dwayne, hopefully you're doing well. Hopefully we can get you a good answer right here.
Well, I'll give him a good answer no matter what.
Hopefully you're still watching, Dwayne.
With the suit that Dwayne has on, I think he should be lending me money.
Looks good. Yeah, exactly.
It's good, man. So here's the deal. We have some basic requirements that you're selling Amazon FBA for 6 months, minimum of 6 months, that you're making a profit. And we have a minimum that we'll invest is $10,000. So you have to have $10,000 in your business, and we'll put in $10,000. A lot of people have said to me, and one more requirement, I'm sorry, that you're a US-based LLC. You could be doing business anywhere in the world. You could be, I saw somebody was in India and Canada and so forth, all well and good. But all we would ask you to do is open an LLC in the US, because that's the entity that we can work with. And I'll explain why in a minute. So that's basically it, Dwayne, is 6 months in business, profitable, minimum 10,000, and be an LLC. And people say to me, why would you go as low as 10,000? Believe me, that was a discussion early on with the hedge fund. Like, why would you go that low? You can do so much better if you had your minimum of 50,000 or 100,000. And they're right. But we had the conversation internally, because when we were starting this, who did we talk to? We talked to small companies. We talked to small entrepreneurs, and we really want to help them as well. We don't just want to help the biggest guys, which we love. That's so much better for us. But if you have $10,000 and we can get you to $100,000, and we have examples where we took people from, literally like doing $20,000 a month to doing over almost $90,000 a month in a year, and more profitable, like, 6-fold growth and 8-fold profit growth. That's what this is all about.
That's the growth numbers that every person dreams of.
But that,
especially when they do this, yeah.
Yeah, but they had to work their asses off.
Right.
We gave them the fuel for the fire, but they had to have the fire. to go and build the business. And, we're not in there telling them what to do and how to do it, but we're here to help them any which way we can. And we're here for advice. We'll look at products for them. We'll run the products through our engine. We give them business advice from time to time on all sorts of things. And truthfully, we give personal advice too. Part of business, and I've run companies with, thousands of employees. Part of business is motivating people and helping them on a week-to-week basis and knowing who they are personally. And truthfully, there's nothing better than that, knowing who they are personally and really helping them and rooting for them every step of the way. Yes, it's good for us, but damn, I just want to see them do well. We talked about it from day one, Ryan, and I think you'll find this interesting, but this is the whole theory of the company. From our first team meeting, when we put everything together, when we put a small team together, we sat down and we said, I'll tell you, I said that as a rule, if anybody ever comes to the table and says, hey, we can make more money if we do X, I said, I don't ever want to hear that. Come to the table and say, our sellers can make more money if we do X. Then that's an idea that we want to get behind. Because if our sellers do better, we do better. We don't ever have to think of ourselves. Let's think of the seller, and that's how we do it.
I think that's a cool philosophy because I know me personally, I go off of a mantra of, hey, if you're truthful and honest and you put the customer first, your product will speak for itself, whether it's the right opportunity for them at that time or if it's not, and there's a different, better option for them later. As long as you can be truthful and say, our priority is you. We're not here to suck you bone dry of like all your, ambitions and whatnot. Like you have to put in the work. We're just here to support. That's all. That's what a true partnership is in my mind. And it sounds like that's what you as a company are trying to push forward and continue to do. Again, everyone, thanks again for joining. We're not going anywhere. We still have a lot more to cover. Don, as long as I have you, and you don't need a bull anytime soon. I think there's still a lot of questions coming in. Again, everyone joining around the world on LinkedIn, YouTube, Facebook, thanks for joining us. This is Crossover Commerce. I'm Ryan Kramer with Ping Pong Payments. I brought on Don Henig of AccrueMe to talk investments and why it's important, why you should, think about companies like AccrueMe or other business entities out there to potentially, elevate you and your business forward. We have a question from Joanna J from YouTube. Thanks for watching on YouTube. To understand what you said, you only get half of what is rightly yours. That is, when it's 50-50, you only get 25 back. Is that true? Does that situation make sense to you, Don?
Yeah, it does. Okay. But let me just restate it, Joanna, so this way we're on the same page. So yeah, when it's 50-50, I'll keep with the $10,000 example. You have 10,000, we put up 10,000. So now it's $20,000 total. We represent 50%. So what percentage of the profit do we get? For that month, it's 25%. But now, Johanna, take it to the next month. All right. So let's just play this out. If you think about it, I'm going to use simple numbers again. The 10,000. I'm going to say 20% ROI, all right? Just to keep the numbers simple. So on your own, you would have earned $2,000. Now AccrueMe puts in $10,000. So now you have $20,000. And let's assume you can do the same numbers as you did previously. By the way, we don't take any profit for the first 30 days because we feel that, we want to help give you a jump start so that you keep all the profit for the first 30 days, even though our money is in there. But after that, so what do we get? So we represent, in this case, 50% of the capital. We get 25% of the profit. So in month one with AccrueMe, you would earn $4,000. AccrueMe represents 25%. So AccrueMe would get $1,000, which we're thrilled over. You would get $3,000. So you just went from $2,000 to $3,000. So literally magically, if you will, you just increased your ROI by 50%. You went from $2,000 to $3,000 in a month. You didn't put any more money in. You didn't take any more risk. You worked harder. You found the right products, and you got an extra $1,000. But now let's go to month two. This is where it gets exciting. In month two, let's say we both leave our money in, okay? You tell us what to do. We don't take the money out. You tell us if you want us to take money out. Otherwise, we leave it in and let it accrue. So we earned $1,000. So month 2, what's our capital? It's $11,000 now, right? So we went from 10 to 11. Your capital just went from 10,000 to 13,000. We don't represent 50%, right, Johanna? We don't represent 50% anymore. We're about, I don't know what the number is, but roughly 46% of the total capital. So in month 2, in that example, we wouldn't be 25% of the profit. We'd be half of 46, so 23% of the capital. So the unique thing here, and if you go to our website and go on the calculator, which is great to do, you can put in your own data and see how everything would work for you personally. You'll see the last chart, and it's the AccrueMe profit participation. And just naturally, based upon what I just showed you there, over a period of time, as your business is going up, our profit goes down, our profit percentage drops. So if you played it out and did the same thing for 2 years, which is unrealistic because it would be, you'd really have to kill yourself to just grow that big, because you could be a huge company in 2 years. We dropped down to 8 or 9% of the profit, minuscule compared to what the company would be. And that's the whole idea, is that we want to see companies grow rapidly so the pie gets bigger and we get a smaller and smaller piece of the pie. And it's great for us and it's great for the seller. That's the idea.
It literally benefits everyone, and that's fantastic.
It's brilliant, man. Come on, say
to pat us on the, or to pat you, not us, you on the back. It's brilliant.
Not me, really, my partner.
No, I mean, it makes sense, and I think just education in general along these lines. It's hard for people to sift through waters when they start going through investments. People wanting pieces of pies, things like that. They start getting not defensive, but protective of their brand, protective of the profits. People don't want to give other individuals and prey on themselves, which is why education like this out there is out there. Companies like you guys exist to assist and help, because you have the resources, you have the know-how and the wherewithal of being able to assist people in that capacity.
So before you go on, I wanted to just respond to what you just said there, because I think it's interesting. People looking at us, let's just say in the example with $10,000, right? The seller has $10,000. And well, what's this going to cost? They're not taking any of that $10,000 and giving it to us. It didn't cost them anything. So we're giving them money to grow, and as long as they're investing and making money, we're getting a piece of it. So what did it really cost them? Use the example, Johanna or whoever in that example went from earning $2,000 to earning $3,000. AccrueMe got $1,000, right? So $3,000 and $1,000. What did that actually cost them? Did it cost them $1,000? No, it didn't. There's not a chance. This is all new money. So anyway, that's the way we look at it. We don't think it really costs anything, as long as the seller is outgrowing. As long as you're growing, you're going to make more money. And that's what this is about. And
we everyone, again, if you're joining or you have to go, definitely rewatch this on Facebook or YouTube or LinkedIn. This content is not going anywhere. It's not exclusive. It's not behind a paywall. This is education to help assist you in your business efforts on e-commerce, on Amazon, and then everywhere that if you're looking to potentially use someone like AccrueMe. Hopefully this will assist you, or at least give yourself a little more perspective on the matter. I would say best friend Dwayne. Dwayne's interactive. We love this. Again, everyone, please chime in if you have a comment, question. If it's individualized, we will share it. And we will do this as long as we can. Dwayne asks, is this exclusive to selling on Amazon? Fantastic question, Dwayne.
Great question. All three of his questions have been great. Yes, it is. So we had to start somewhere. So we started with Amazon.com. And we have a system that's built so it will separate volume that you're doing in other countries and such. And so we're only counting what capital you have in Amazon.com, and only counting the profits and the sales in Amazon.com right now. We will be expanding from there, but right now we've started with just Amazon. which when I hate to say just because it's the it's the monster, but that's where we started. We want to perfect one thing first, and I think we're going to be a few more months of just Amazon.com, and then we'll be expanding from there.
Awesome. And along those lines, I think we also had another question. Is this just apply to Amazon FBA, which is in the same line, Don? Yes, Amazon, but stay tuned, everyone. As you grow, I think a lot of people, to answer that question, start on Amazon,
Yep.
and then they expand from there. Some people start on their own e-commerce websites, like on Shopify or other marketplaces. Going back to what we said earlier, and maybe we touched on this a little bit. You talked about just the United States incorporated company.
Yeah.
What's kind of if you can talk about it, and people are out there, if they're international sellers, like we have a lot of people in India or a lot of people around the world that obviously are tuning in. What's the reason behind that? Is there a reason you can give, or?
Sure. Oh, absolutely. So first off, let's just say you're in India. We'll still be happy to do business with you if you're doing business on Amazon.com. So you could be doing business in 10 different countries, and we'll zero in on just the Amazon.com part. And our system handles all that. You see all the numbers. There's no question on anything. It's crystal clear. But the reason that we have the requirement for the LLC. So let's say you were so legally from an LLC being in the United States, it's just from a legal standpoint. But why an LLC and not a corporation? So if you're a corporation and we invested money in your business, we have to take a percentage of your business. We have to take shares in your business, and they have to be, commensurate to what we're putting in. We don't want to do that, and we could do that, but it's not in your best interest. So by, spending a few $100s and taking a week or so to set up an LLC, that you have the same liability protection as you do with a corporation, and you get some pretty good tax benefits from being an LLC as well. We don't see a downside there. So by doing an LLC, we're able to create a new LLC agreement with you, all right, for the business. So we become your partner, but instead of becoming an equity partner like we would if it was a corporation, where we would own a percentage of the shares, you remain the equity partner. You own 100% of the company. We become the profit share partner. All right. Again, this is very unique, never been done before. As a profit share partner, all we are entitled to is a percentage of profits based upon our percentage of capital, just as we've been talking about during this webinar. That's it. That's what we're entitled to. So we're not entitled to ownership of the company. And that way, if you want to build your business, let's say you're going to go out and sell the business right now, but you can't get the multiple that you need, right? And let me just tell you, there's a lot of that going on right now. You're doing okay, but you might have, grown too fast, or you might have, some people call it getting out over your skis a bit. Okay, well, now you could sell your company and get, let's just say, a 2x multiple, or you could have an influx of money from us, grow the business, get the business growing again, get it growing over the next year, 2 years, and then turn around and sell your business for a 4, 5, or 6 multiple. We get nothing out of that. All we get is a return of our capital that we invested, plus whatever our accrued profits are. That's it. So I'm going to give you one more question that, if it hasn't come up in people's minds, do we ever get paid? Yeah, we can get paid when you sell. That's an easy one. But typically, I'm just going to tell you what typically happens. During the Q3 and Q4, people need money. They're not paying us. They're putting the money back in. They're taking our percentage of the profits. They're taking their percentage of the profits, and they're buying more inventory, as they should. That's where they're going to make their money. And we're going to do well as a result. We want them to do that. We're climbing on their back, if you will. We're tagging along with what they're doing. Well, what happens at the end of Q1? Let's say, from experience a little bit now, February, March, April, May, many sellers are flush with cash. They just came through Q4. They've sold out, all this inventory. They don't need to rebuy everything day one. So they have cash in the bank. Why leave cash in the bank? Pay us. And that's what they've been doing. So they end up paying us and paying us and paying us for a few months. And then all of a sudden, we don't get paid anymore. They need more money, and they're building their business again. And that's the beauty of it. Some are growing throughout the spring without question, which is great too. We have no problem with that. So
awesome.
That's what we do.
And I know we have one more question, or one more question came in. Again, thanks again, Dwayne, for interacting with us. This is awesome. Is the arrangement created that you guys as a company through operational agreement, or is it a basic loan contract? Maybe Don walk through what both means, if for
Sure.
those of you do, for those out
Sure.
there who don't understand the both.
Well, first off, Dwayne, we don't do loans. We're not a lender. We're literally investing. So it would be an operation agreement with, a business operation agreement, LLC operation agreement. On a loan contract, the big difference there is a loan contract would have an interest rate. We wouldn't have that. It would have payments. We wouldn't have that. It would have an APR. We wouldn't have any of that. It would also carry a personal guarantee. And people have to understand that if you take out a loan, you're signing a personal guarantee. Even if it's a credit card, you're signing a personal guarantee, which means you owe that money personally. End of story. Something goes wrong with your business, all bets are off. That bank wants their money, and they're going to come and get it. If you own a house, they're going to want to put a mortgage on your house, a lien on your house. If you're making money, they're going to want to garnish your wages. They're going to get their money one way or another, even if it takes 10 years, they're going to get their money. With us, we have an operational agreement. So we're investing in your company, and the operating agreement is what governs an LLC. And it just really basically details that you're the equity partner and we're the profit share partner. And gets into the arrangement further than all of that, and in detail, but it's clear as could be. As clear as could be. And when you want out, all you want to do is give us our money back, plus whatever our accrued profits are, and that's it. You walk away. You don't have to give us 30 days notice or 60 days notice or any of that kind of garbage. We don't do any of that. If you went out tomorrow and you gave us our money today, you're out today. End of story. So we're not putting a lien on your inventory or anything like that. No personal guarantee, no credit report. We don't report to the credit agencies. So it's a completely different way of thinking. You're welcome, Johanna.
I was gonna say, I saw this earlier, but I know there's been so much information that's been shared today. Which is fantastic. Again, and that's what we're here for. Again, maybe we have to invite Don back and talk a little bit more about, if you have specific questions, everyone, if we haven't individually answered those, or if something pops up down the road, obviously reach out to Don, or you can follow us and like us here on our show. We're more than happy to kind of bring people on like Don to help answer questions they might have about the industry, because it's constantly changing. I know, for example, just in e-commerce world yesterday, the marketplace in Sweden opened up. Lots of people are asking questions about, how do I get into Sweden? How do I start selling in Sweden? How do I start using my investments, or shipping logistics, or even VAT requirements? All these things, both either Don as a service provider and his team are ready to help answer, or here at Ping Pong, obviously you guys have found us one way or another. That's why I ask everyone to like, share, follow all in everything, both AccrueMe and Ping Pong, on their social media platforms for content that you can consume and educate you further. And our teams are here to obviously answer further questions about how to make you grow in your business. Maybe some fun questions I have, Don. I know Halloween's coming up. I was thinking about this too. What was your favorite Halloween costume as either an adult or a child?
Oh boy. All right.
I told you I would have a fun question for you.
Wow. I wish you gave me this one before. I'm going to give you one. That at one Halloween party we had at my house, my wife and I, before we had kids. It was one of those parties that 35 years later everybody still talks about, because nobody left until about 10 o'clock in the morning. Just to put it in perspective, it was a pretty fun time. But one of the things, what I did, and my nieces all saw me at the time, is I had a dog face, and whatever I did but I was a dog. I was a rabid dog, is what I was. So instead of my nieces calling me Uncle Don, to this day they call me Uncle Dog, which I love.
Uncle Dog. I mean, you gotta be
Uncle
careful
Dog.
what you wish for. Yeah, exactly. That's
I
well,
love it.
that's not the worst thing in the world. They could iterate from that a little bit, or or just
It's great.
that's funny. When I was talking to my wife
Sure.
about this, and I don't know if she's listening. She might be. She works from home too, or she's probably hearing me through my office. But she's like, "Well, what if he asked you that question?" And I was like,
I what I
thinking
was
about
going
it.
to say.
Exactly. For all those who are just dying to know, I was like, man, that is a hard question. And I was thinking about it. Again, for fun, everyone, if you want to share your favorite Halloween costume, let us know. This is an interactive show for all the fun interaction. But I was talking to her and I said, you know what? If I had to go back in our photo albums, I was probably a Power Ranger more often than not. And it iterated from the Red Ranger, like, and for those who don't know, it's a 90s TV show that I grew up as a kid in the 90s. But I was probably that more often. And even in college, I think I joined up with a group of friends that I was still that. And I looked at myself and I was like, my gosh, like something stuck with me. And that's probably my number one that sticks out in my mind. But I did the whole paint your face and go around with the pillowcase and go door to door and know which house was the king size candy houses and whatnot. So, but yeah, I know that's different this year, obviously with everything going on. Maybe what's kind of your plan? This is, and for those of you who don't know, maybe we didn't touch on this. This is post-retirement for you. This is your post-retirement job, quote unquote, right?
Well, I've actually retired 3 times. I never called it retirement.
You shouldn't do that anymore. You need to reuse the banner of like happy retirement, Don, and they'll have a number in front of it. Like,
Yeah, exactly. My wife called it retirement. My kids called it retirement. I always called it taking a break. And, I'd take a break for a year or so, and then I'd start something else. And then I would take another break for a year or so and start something else. This last time was 5 years, and I was done. And when my partner Eric and I started talking, we haven't talked in 20 years. Not, just because we just haven't talked.
busy. Yeah.
Yeah. And we knew each other from the mortgage industry, and we got together for lunch, and we just hit it off again. And we started talking about different ideas. And I kept saying, no, my life is too good. I don't want to get back in. Anyway, Amazon, something completely unique in finance, something that really helps sellers. Okay, I'm getting back in. And I'm loving it. And I think we're really helping people grow their business, and we're teaching them what to do. And that's exciting. It's exciting. And if anybody wants to reach out, my LinkedIn, I like to kid around that, it's not my name, Don Henig. It's my mother, the way my mother would call me, Donald. So it's Donald Henig, in case you're looking for me on LinkedIn. Feel free to connect. All my contact information is there. So, I don't hide behind anything. My email is don@accrueme.com. Very simple. So feel free to reach out, but I suggest people go to the website and check out the calculator. That's really the key. The calculator is what's going to tell you pretty much everything, and then we can go from there. Very good, Ryan. Wow.
Look at me. I'm producing. I'm hosting. I've got this down, man.
You didn't capitalize my first name. I mean, what kind of garbage is that, man?
I know. Well, not everyone does it, but in the time that we have, I want to make sure I get it
Good
in
man.
there. But yeah, my team's not awake yet. They're still on the West Coast. So if you're on the West Coast and you're just waking up from ping pong payments, shame on you. You guys just missed out on an hour-long awesome conversation with me and Don. But anyways, I know we're kind of running up on the hour, Don. I don't want to take too much more of your time. It looks like one more comment. Let me make sure it's not one more question. Oh, look at that. We got thumbs up. I think this content from everyone is thumbs up. And I would agree with them. I think this is super enlightening for me as an individual to kind of talk on more as an educator, more as an expert in my field. Obviously, ping pong payments has a very specific, helps people in different ways. Like we like to save people money. Don's on the other way. He likes to give money away. So in a very simplistic way. But
I love ping pong, by the way. we love how simple it is to use ping pong. So, we're big fans. We are opening our own account with ping pong because we love it. It's brilliant.
Right. Well, I'm glad. I appreciate you, joining in, and everyone for obviously tuning into. This is Crossover Commerce by Ping Pong Payments. We are, and for those of you who want to reach out to Don, again, that's his email address. We're here to just bring people on the industry. It doesn't matter if they're a competitor of people we've had in the past, or if they just want to talk e-commerce and give a different perspective. This is what that platform is. Obviously, if you have questions for Don, that's his email address below, don@accrueme.com. I am Ryan Kramer. I'm the affiliate marketing manager for Ping Pong Payments. If you have a question or if you'd like to see a specific topic, obviously touched on here on our show, we go live every week, or I've been going live every week. You can follow us on Facebook, YouTube, Twitter, Instagram, YouTube. We're on all the channels. We also we have a weekly webinar series, which I know, Don, I believe you're lined up to chat more of a presentation style about what you do as a business. Check this out. That's every Thursday. That's actually coming up here a little bit later today. For those of you who are interested, we have some great topics there. Follow us on social media, subscribe to our newsletters, reach out to Don and his team. Investments is a tricky thing, right, guys? So we're here to educate you further, to hopefully give you that perspective. Super exciting and fun conversation. As always, Don. You and I go back and forth. I love our late night emails back and forth about topics of like, what are we going to talk about? I'm going to start writing some things down, and I'll be in touch, obviously, with you further. Everyone, I hope this was super helpful for you. Again, follow us on for future episodes. If you liked what you heard from Don, if you want to have him back for a specific topic we can touch on, even more presentation style, let us know. We'll be more than happy to kind of get that to you, or if it's more of an individual setting, I can help facilitate that with people. But this is Crossover Commerce. I'm Ryan Kramer. Thank you, Don, for joining me today, and it was a pleasure talking with you.